In today's session we will deal with the practical, actual, and visible differences between the three instruments of the stock market, namely, cash, futures and option. At the top left corner of the screen, we see Nifty 50 Index, followed by Bank Nifty Index. Further down to the right is Nifty Financial Service Index current spot market price. Spot price is the cash price of an underlying asset which differs with its futures price. The lower portion of the screen shows futures current market price of Nifty 50, Bank Nifty, Nifty Midcap 50, and Nifty Financial Service Indexes and their respective expiry dates. A careful look at the spot and futures market price will denote significant price differences. As earlier mentioned, these four major indexes of the Indian stock market are volatile, wherein each index itself can be traded, not only the underlying assets there in the index, which means one can buy and sell the indexes in cash, futures and option, as permitted by SEBI. In the case of cash, minimum one quantity of the index can be bought or sold. In case of futures and option, minimum one lot of indexes can be bought or sold, irrespective of whatever is or may be the size of one lot. Now, we deal with, and explore derivative options, being the most awesome and awful amongst the three earlier mentioned instruments, cash, futures, and option. This chart displays option spread or options chain. Herein, we see columns split into three major sections. These three columns are that of Nifty 50 Index option premiums. The left-hand side column lists calls and the right-hand side column lists puts options. The vertical orange color column in the center, between the calls puts lists denotes strike prices. Each strike price differs by Rs 50. The LTPC column shows the last traded premium price of the respective adjacent call strike price, and the LTPP column shows the last traded premium price of the respective adjacent put strike price. The ASK-T and ASK price columns on either side of the calls and puts denote potential sellers seeking selling quantities and selling prices, respectively. The BID-T and bid price columns on either side of the calls and puts denote potential buyers seeking buying quantities and buying prices, respectively. Take note and bear in mind, the option prices are the premium values of their respective strike prices. These premiums swell or squeeze with respect to trend and expiration date. In other words, water may turn into ice, or ice may melt down to water and vaporize soon in accordance with the trend and time to live, TTL, being the expiration date. Therefore, the awesome and awful, as well as the risks to rewards are well to be understood. A king may turn to beggar or beggar may turn to king. Let's move forward. In option trading, there are three aspects or outlooks, namely, ITM being in the money, ATM being at the money, and OTM being out of the money strike prices respectively. These aspects or outlook are in context to the spot and futures market prices of the indexes or underlying assets as may be the case. Now, let's consider the current spot market price of Nifty 50 Index to be Rs 19,428.30, hence the 19,400 strike price is the common at the money strike price for both, the call and put option as well. Whereas all the strike prices below the set at the money strike price 19,400, are in the money strike prices for call options. Contrarily, all the strike prices above the set at the money strike price 19,400, are in the money strike prices for the put options. Nonetheless, all the strike prices above the set at the money strike price 19,400, are out of the money strike prices for the call options. Contrarily, all of the strike prices below the set at the money strike price 19,400, are out of the money strike prices of put options. Take a good look. These calls and puts premiums have a weekly expiration time frame. For example, August 17, 2023, August 24, 2023, August 31, 2023, so on and so forth. The premium prices for every strike price of each, and every weekly expiration will differ. in view of the option's time to live, considering the expiration date and subject